Josh, you were on TV today.
Yeah.
Where, what was the talk around interest rates? Because the 2 year is screaming today. Did that come up
I
at all?
don't even think interest rates came up. The big thing going on the show today is like if we're in the foothills of a recession, why is earnings growth still posting 12% growth year over year? Like, how defensive are the largest cap companies in the country? Because the tech companies now look more like consumer staples. Like, honestly, who's pulling the plug on their Netflix?
And that's where the growth is coming from.
Even if they lose their job, who's like really canceling? And if they cancel, do they go from premium tier to ad-supported tier? Because that's even better for Netflix, more profitable consumer. So if the S&P is increasingly looking like the biggest companies that matter the most are actually defensive, it's a different mindset about what does it even mean to have an economic slowdown in terms of the stock market. So that's kind of the debate. And the obvious thing to say is, yeah, it's different this time. Just wait. Of course, right? And nobody wants to be the idiot saying, no, you don't understand. Apple's a consumer staple. It's not consumer electronics. Therefore, the recession won't hit the stock market. Of course it will. But that's like the big debate people are having. Do you think like big picture kind of stuff, or you worry less about that?
No, I mean, when we're thematic, it's usually just in the rearview mirror. When we say like, oh, wow, we did a bunch of, fake ESG company type shorts, or even some that would be deemed real ESG companies, but are actually pretty horrible companies. So no, we don't usually think along those lines. Now, that said,
it affects your output though. Like it affects the results.
Well, I mean, what I worry more about are flows and technical factors. Stuff in the S&P, the S&P is driven by the largest names in the index. And the way I look at it now is that the fundamentals matter more and more just on the margins as opposed to the flows. So if you get a lot of, and the main drivers of the flows are 401k plans, or 401k
relentlessly so.
Right.
Every 2 weeks.
Right. But if you get a situation in which there's increasing unemployment and the flows became net negative, then you would see all of this go in reverse.
Yes.
So, that's.
We say all of what go in reverse? The flows? The flows never go in reverse.
Well, but if you had net redemptions from 401ks, because people, I know where I'm not waiting around for that day, but that's the point that I make to people when, I get asked, I hate if I go on TV and the host is not well prepared and they're like, oh, what do you think of NVIDIA? Doesn't it seem expensive? It doesn't matter. Yeah. Like, don't you understand? It's about the flows. The flows will keep coming. Oh, well, what'll change that? When people have to redeem from the 401ks.
Please cross out question number 6.
No, but wait a minute. Hold on. But Carson, so I still believe that earnings drive companies. I would imagine that you believe that to a certain extent.
It depends on the company. I mean, if it's a major part of a major index, then less so.
All right. Okay. So for the last 3 years, I don't have the exact data, but I was just looking at this because it surprised the shit out of me. Over the last 3 years, there are a lot of companies in the S&P 500 that are down 30% or more. A lot. And they're generally companies that have not performed. Like the businesses are not performing, and therefore the stocks are not performing either.
Okay. So... Well, but the thing is, you have fewer and fewer people out there taking fundamental views,
no doubt,
on these stocks. That's part of the problem. You've had this big rotation from active management to passive management, and one of the main drivers, in addition to index flows, is also companies buying back their own stock. So if a company is cash flowing, that marginal buyer of stock, then it's not going to be the fundamental fund manager that's trawling the mid-cap universe looking for the stuff that's unloved. It's going to be the company itself. So to the extent that company cash flows equal share buybacks and inflows into the stocks, then yes, there's a link to fundamental performance. But, I just think so much of the U.S. markets now are really driven by passive.
The two worst Mag 7 names this year, Apple and Tesla. Apple's doing a record-setting $100 billion buyback, and it still manages to so substantially underperform Microsoft that the two charts overlaid look unrecognizable. So if we're saying it's buybacks and it's indexes, why isn't Apple doing as well as Microsoft? I think the answer is because the fundamentals aren't as good right now.
It's not growing.
Well,
It's not growing, and Microsoft is.
So without seeing a chart, I mean, I'm guessing that there's a correlation to when we, went into Liberation Day land, right? In terms of
So the underperformance of Apple versus Microsoft definitely predated that, but it was probably caused by that. I would say. I'd say you're probably 80% right on that. But still, you would if it's mostly buybacks and indexing, the marginal dollar that's either coming from Apple's corporate coffers or the index buyer who's price insensitive, doesn't give a shit, it's not pushing Apple up the same way it's pushing Microsoft up. So I think there are still people doing that work and attempting it. Just less of them. Just less of them.
Yeah, no, there are some, but I mean, there's such a disconnect between, especially in when you look at valuations. I mean, the valuations. I don't sit there and think about like, what should Nvidia trade at? But I mean, it's so hard to find these companies that are Mag 7 and say like, oh wow, what a great value this is. So
I got one. Alphabet is selling it at 60% of the market multiple. Is a Mag 7 on sale relative to its own price earnings history, relative to the S&P for good reason, but it's there. Somebody wants to take the risk and buy Alphabet with search now falling, So
plus the concern about the recession coming and dent in advertising revenue. And
anyway, why are we talking about the Mag 7? You said the worst question.
That's definitely not my.
I guess what I'm trying to say is the flows are 100% probably pushing up multiples over the very long term. Like just CAPE ratio now versus its own history it's a higher multiple than ever. But inside of the index, even amongst the 10 biggest stocks, there's pretty big dispersion these days. In 2023, there wasn't.
Right.
Those stocks all went up every day for any reason. It didn't matter. Good news, bad news.
Let's start the show.
Ready to start the show?
Yep, let's get it going. 3 o'clock's coming in.
Oh my God, you guys. This episode is sponsored by Apex FinTech Solutions. The time to compete for next-gen clients is now. Like now. Transforming your business for the future might seem like something that you can push off, but by the time it is a problem, it may be too late. Sure, you could sit this one out, and your business will probably be fine tomorrow, but meanwhile, you are letting some new fintech win a generation of loyal customers around you. Augmented advice from Apex gives you the power to be what the next generation wants on your terms. It's not a robo. It's a modern on-ramp to tailored advice using your brand, your personal touch, and Apex efficiency. Learn more at apexfintechsolutions.com/augmented advice. Ladies and gentlemen, welcome to the best investing podcast in the world. Carson, we're known for our modesty. That's kind of our whole shtick. I am so excited for today's guest. We've never talked before. Like, I think I've met you in passing, but we never had this conversation.
Not a long one. I think we spoke on the phone once, but yeah.
All right. I've admired you from afar, and I've always followed your stuff, and I'm not a short seller. Michael's not a short seller. We don't know how to do that, but
I shorted Amazon in 2011.
How'd that work out?
Pretty good.
All right. We don't know how to do that, but I'm friends with short sellers. Jim Chanos is a friend, and we've talked a lot about how much respect Michael and I have for Jim, and we look at you guys like just these people operating on the market in a way that's counter to what everyone else is doing. But I think you guys are part of the health of the overall ecosystem. When done correctly, short sellers will uncover things before journalists.
Regulators.
Way before regulators. And it's needed because if the executives of publicly traded companies have no fear that anyone's going to catch on to what they're doing, 5 years of that, you could imagine what our markets will turn into. So
you are a governor of bullshit. We need more short sellers.
Yeah. So I want to start with there. And where I want to go from just making that statement to you is to just give the listeners and the viewers a sense of like how did you wind up becoming a dedicated short seller or an activist short seller? I'm not exactly sure how you couch what you do, but tell people like the origin story.
Yeah, sure. Well, if it's okay, I'd like to just explain a little bit about activist short selling.
I would love that.
And so where Jim and I differ, Jim will short companies for fundamental reasons, as well as if he thinks they're scammy. And actually, if you short a scammy company, whether it's a stock promotion, which is just on the right side of being legal or it's in the gray zone, or a fraud, it's actually really bad short unless and until somebody tells the world what's going on. So if you're a traditional short seller where you put some risk on and then you don't really talk about it, you actually want to stick to the fundamental space. So, at least the way Jim used to run his portfolio, there were 70 to 80 names in it at any given time. In a year in which the market screams, he expects to lose money on an absolute basis, but he's there selling alpha. Now, what we do as activist short sellers, most of us who are in this space, we're only able to really speak on 5 or 6 companies a year. And we're looking for companies that are scammy, whether they are stock promotions, they are frauds. They're doing something they shouldn't be doing, and the management is hiding the ball in some respect from investors. And so then we take short positions and we speak about them. So if you just say theoretically the universe of shortable companies were 100, what would fit into our category would be something around like 5.
5%.
Yeah, I think 5% of what people would consider the shortable universe. And I'm just
Are you making the case that in order to be a short seller of scams and frauds, you have to be an activist, because if you don't speak up, then the thing can go on for way longer and it's not a real way to invest?
These days you do.
Okay.
You mentioned previously journalists and regulators. And the thing is, if the financial media still had investigative journalists, there are very few. What's happened obviously since the dawn of the internet is that newsroom budgets have been cut on a per employee basis. The people who knew how to do the work are expensive older employees. They're laid off.
No more Herb Greenbergs.
Yeah, no more Herb Greenbergs. And he even tried being an activist short seller for a little while. So
there were more reporters who were willing to run down something that looked fishy than there are today.
And it's really a problem at the publication level. Like the publications don't make money off of your long form deep dive research anymore because everybody wants clickbait headlines, quick hits.
Yeah.
So they're not there. On the regulator side, a lot of people misunderstand what regulators do and don't do. And same is true of auditors. But regulators are not there proactively looking at the universe and saying like, oh, who seems like they're cheating. They wait for a blow up. As Jim puts it, they're financial archaeologists, basically. They're not detectives. But the other thing is where regulators do have a role, I'd say they've had a very negative role to play in what I've seen since the financial crisis, is that they made a decision post-Enron. In the U.S. government, there was a feeling after Enron that the government response was too harsh. Especially with respect to Arthur Andersen.
Yeah.
And so they've basically treated a lot of the managements and the people around them with kid gloves ever since. And so you have this, the probability of getting caught now doing something you shouldn't do is lower than ever. The government generally has less appetite to litigate difficult cases that are in the gray zone. And the rewards, and this is the crazy thing. When I started doing activist short selling in 2010, the way I thought about it then is if you were able to scam $50 million out of investors, out of your company, like that puts you at the big boy table. Today, that's a laughably low number. Like you're still
Really?
sitting with the kids at Thanksgiving dinner, right? Like
Okay.
the numbers, because of the inflation of asset values, the numbers, the rewards are so great in absolute terms. So yeah, the incentives.
The rewards for cheating.
The rewards for cheating. So, I think in modern times, the rewards for cheating have never been greater and the probabilities of getting caught have never been lower. And you also have this entire market or investor class that's really anesthetized to risk and frankly doesn't care a lot of times.
I think. Oh, I was going to interrupt. This is the hallmark of a conversation with me. Is everything you say generates like 3 questions in my mind. They're anesthetized to risk because they're not taking as much single stock risk in the way prior generations of investors did. They're not living and dying with individual companies. They're buying baskets of stocks, and if one rotten apple is in the basket, it all comes out in the wash, and they end up okay. Versus somebody 20 years ago who had a portfolio of 20 individual stocks. And if one of them was a fraud and went to zero, it would make a real impact on their brokerage account.
Well, look, that's part of it.
Yeah.
But I think the other factors are that kind of amazingly, I'd say we've had 2 generations of professional investors enter the market since the GFC. So to them, what is risk? 2018, Fed decided to cut again. 2020, risk is opportunity for them. Like, oh, things are going to blow up. Balance sheets are too fragile.
Yeah.
Awesome. That means
Silicon
somebody's going to come
Bank.
in.
Right.
Somebody's going to come in and bail everything out. Like, this is fantastic. And that's not the way markets should work. I don't think it's the way that markets will work in perpetuity, but that's part of the reason why on a single stock basis, if you're talking to investors about like, hey, I think this company has some issues here. I think management, no, don't talk to me. And like the people on the long side, you used to get compensated on the long side for caring about that, for caring about risk. After I'd say 2013, they became the butt of everybody's joke. Like, oh, that guy's a value investor, ha ha ha. So I think that that's the bigger issue is that all of the emergency monetary policy that way outlasted the emergency and went into the next emergency, which led to even greater emergency monetary policy. I think that has anesthetized investors to risk. So even as an activist short seller, a lot of times, I felt that every year the bar to find stories, for lack of a better word, that people would care about got higher. It's like, yes, the market caps of the most dysfunctional companies got larger, but people just didn't care. And,
right.
We still face that situation.
So Elizabeth Holmes was unmasked by the Wall Street Journal. It's not a public company.
Mm-mm.
They kind of get to it first before, because that was on an IPO track. From my perspective, I'm sure there's every bit as much fraud in the market as there always has been. Maybe there's more. It sounds like you think there's more. But like from my perspective, why even bother? Commit the fraud with private companies. Then you're just dealing with venture capitalists. That almost seems like the Wild West right now. And nobody can short those stocks because they don't trade on an exchange, can't borrow them. But like from my perspective, it looks like it just seems like it would be way easier to commit fraud in that part of the world. And that part of the world is now trillions of dollars worth of non-public equities. So, I mean, what do you think about that idea?
Yeah, I mean, I wouldn't assume that there isn't rampant, fraud or misrepresentation. And I had this discussion several years ago with somebody who was in a pretty high-profile litigation with Snap. He's actually a crypto god now, Anthony Pompliano.
Sure.
So I don't know if you remember that litigation. He'd come out of Facebook, and we were discussing how in the private markets, when these companies go to raise money, so obviously, the financials are irrelevant, right? Because they're nascent businesses. And so they're audited, but the auditors don't look at the user metrics. And so
auditors look at the money.
Well, but there's hardly, it's just like, oh, money hit the account and they spent it. Yeah. So the key thing, I mean, when these companies raise money, it's based on their user metrics. And it turns out that very few to zero of the VC firms actually try to diligence these numbers. And the way that Anthony explained it to me, and when I've talked to a number of other people since, it made sense, is that it's like your typical software startup. It's a few people working the proverbial garage. Okay, you build this, you build that, and they kind of draw straws to see who has to build the user measurement systems. Like, who gets the short end of the stick here? Oh, shit. Like,
nobody wants to do that.
Right, nobody wants to do that. It's not sexy. You don't put a lot of effort into it typically, so it's poorly done. Raise money, user growth goes, starts to hockey stick. Nobody has updated the measurement systems. And so even if you intend to accurately represent your user metrics, it's really hard because you have a very poorly done system for it that got no love once you started to raise money.
Right.
Now, against that backdrop, you also have people who are willing to exaggerate or misrepresent or even outright lie. And it's very difficult, again, when you're talking about a system that's, kind of thrown together in the most efficient way possible, maybe not most efficient way, and in the laziest way possible, it's pretty difficult to contradict that.
Charlie Javis is going to jail. So she sold She sold a startup with fake user data to J.P. Morgan.
Mm-hmm.
You would think J.P. Morgan, being one of the most sophisticated financial players on earth, would have maybe done a little bit more due diligence before the fact. But whatever, they discovered after. They sent an email to all the users, and they looked at the response rate, which was effectively nothing, versus when they normally send marketing emails to other populations of email addresses, and they knew right away we bought a fraud. They convicted her. I think she's going away.
Yeah.
So
and I don't know that case in detail, but based on what I do know, I don't fault JP Morgan because that's hardcore fraud. Okay. From what I understand.
Deliberate.
She went to somebody and said, hey, create a bunch of user profiles that look entirely random and look real. And so if you're JP Morgan and you're buying a business and you see that data and it looks real, you're going to assume that most people are not going to risk going to prison for this.
It's completely insane.
Yeah, it was a stupid fraud.
But Theranos, like Elizabeth Holmes at Theranos, seemed equally insane, pretending that you can detect medical issues with a blood sample when you know you can't. How? I guess the only thing you could say there that might have been even a dose of sanity is she thought she could fake it until she made it. Mm-hmm. And eventually the technology would work.
Yeah.
But other than that, this is insane behavior.
So I was on spoke at an event a few years ago. One of the speakers was Alex Gibney, and he's the one who produced the documentary on Theranos, Bad Blood, that was based on the Kerry Rue book. And he also did The Smartest Guys in the Room. So he's done a number of financial fraud documentaries in the interim. And he had what I thought was a really insightful comment, which is that the vast majority of people who end up committing fraud, like she did, like the Enron guys, it's not their goal at the outset. It's that they do something where it's a little bit over the line and, then they figure, okay, that's it. But it doesn't get better. And so then the next time they move a little bit further and a little bit further. It's very incremental. And before you know it, they're just, they're so far gone.
That's like the story of FTX. I don't think Sam Bankman-Fried started FTX to commit a fraud.
I think that's Madoff. Mm-hmm. I think Madoff got away with it once, and then over decades, the whole operation springs to life. But where it starts, I think, is not being embarrassed in front of your friends and family.
Right.
That's almost always the origin.
100%.
So Madoff cleaned out the North Shore Country Club. He cleaned out the temples, Florida and New York. He's bi-coastal, very talented. He cleaned all these people out who were his friends. I don't think at the outset it was let me rob my friends and family. It was, I can't admit to these people that last month might have been a bad month for my portfolio.
So I'll take the other side on Madoff.
Okay.
I think that guy was a hardcore psychopath.
Well, eventually.
The reason I think that is because this guy had a very successful trading business. He was a pioneer.
Yes.
This is not somebody who needed the accolades, the returns, or the money, frankly. So I put him in a different category of, because, especially in this business, I'm sure you've met people where you think, okay, that's a smart, talented person. They could have made money the legitimate way, but I think they just enjoyed stealing it too much.
Oh, that exists.
Yeah.
I've met people where I've gotten that feeling.
And that's, look, I never met Madoff, but I put him in that category.
Okay.
So getting back to the area that you play, the publicly traded companies, when you talk about these scammy companies, these fraudulent companies, who is benefiting and at whose expense are they benefiting?
Sure. So it's almost always management. So, the CEO, the founders of the company, they have a ton of stock, and basically as the stock ramps, they're going to sell it. And so they're effectively taking money from the public investors. And the thing is, so if you go all the way back, and I did start paying attention to this in the 80s when there was that that theory that came out of academia, like, hey, we need to align incentives between management and shareholders. So let's think about equity compensation. And in theory, that's great. And up to a certain amount of compensation, it makes sense. But the thing is, companies started hiring compensation consultants, or the boards did, and they're always saying, oh, no, you got to increase this guy's pay because, and since the board is always the CEO's buddies, you just got this arms race where everybody was giving their CEOs more and more stock comp. So you get to this situation where the incentives are completely misaligned because you can throttle a company. You can make things look good while mortgaging the future of the company. You can play that game for 2 or 3 years, get a lot of stock comp, sell it, and then when things blow up, you're fine. And one of the biggest mistakes investors always make in that situation is like, oh, gee, he still owns, blah million shares. It's like, yeah, but when you've taken $250 million off the table already, like that's the idea.
The
like,
compensation
that's the game.
committees are a cartel too. Like these numbers don't materialize out of nowhere, or maybe they do. But the reason why they actually get paid is because the CEO down the block at a rival company is getting the same thing.
Right.
It's not like it's not like it's a thing where everyone's operating independently of what's happening around them.
Right.
Yeah.
And it just keeps raising the bar.
Yeah.
But then my favorite dysfunctional behavior when you think about companies and compensation is mergers and acquisitions, right? It's like they acquire a company, they get bigger. It's like, well, all of my peers who run companies of similar size now, they get paid more. And so it just becomes this joke. So as I watched like HP consolidate and, back in the day, I mean, first it bought Compaq and, and just watching the pay rise for Meg Whitman. It was, I don't know, I would sit there laughing. And to me, it was obvious what the game was, but whatever. A lot of people lost real money there. And then they bought that thing Autonomy, which a bunch of short sellers knew was a fraud, had written to the board. They bought it. And I think within a year, HP was complaining and filed criminal complaints against the sellers of Autonomy, or the guy who'd founded it. Who
was he killed?
Yeah, he died.
No, was he murdered?
No, that was
you wouldn't go that far.
That was a tornado, man. Like that's no, and
no other boat. Because let's tell people what we're talking about. The guy who sold Autonomy to Hewlett Packard got sued into the Stone Age by Hewlett Packard, right?
No, he was still worth about like $300.
Okay,
bucks,
but the lawsuit that he ended up winning.
Well, so he had just
was it criminal?
Well, he had just been acquitted.
Acquitted in a criminal trial.
Right, a criminal trial in the U.S. I mean, that had been like 10, 11 years of his life. And so he had a celebration party aboard the sailing yacht that he owned. They were moored off the coast of Italy.
Amalfi.
Yeah. And, really sadly, he had his daughter on board.
Yep.
He had, ironically, one of his criminal attorneys on board.
An investment banker from Morgan Stanley.
Right. And he had some other people on board who escaped, but the boat went down with him on it. And what I got from the early investigation, I think they were, the authorities were saying that the captain did not like shut the hatches or,
the windows.
The windows or the hatches.
Yeah.
And I think, and so like
it's a really crazy karmic thing. It's
extremely karmic, especially because I think the CFO, who had also been acquitted, was killed like a few days earlier in a bicycle accident.
Yeah, that's okay. That was the part I was going to get there. There was another related death, unrelated to the incident, but related to the situation.
Yeah, and look,
we don't have to.
I think it's one of those examples of how occasionally life is stranger than fiction.
Yeah.
Where do these ideas come from? Are you running quantitative screens, or is this just word of mouth and somebody gives you a tip? How does this work?
Well, first of all, we're very sensitive about using the word tip, since that's a term of legal significance, insider trading.
I meant your community.
I know.
Yeah.
I'm not a believer in screens because I think you get a lot of false positives and false negatives. I mean, other activist short sellers might take a different approach, but we get a lot of people, usually long short funds, shopping us ideas. They're short XYZ. The substantial majority of the time, it doesn't work for us. It might be a great short idea, but it doesn't make for great short activism. So going back to that difference between the shortable universe and what we do, you have to be provably right at the time that you speak. So if I say, oh, the street has this wrong, competition is going to erode margins much fast. Like that's like we'll find out when we get there. But
you're looking for guilty beyond a reasonable doubt.
Right. I'd say the standard I look at is the civil standard. Can I prove by preponderance of the evidence in the market? I mean, I would like to do beyond a reasonable doubt, but
can you prove what? That something the company is saying or doing is not what it appears.
Correct. And to be clear,
that's a high bar.
Yeah, and look, to be clear, also a lot of people associate us with, oh, you guys short frauds. 20 to 25% of the companies we short, we think are frauds. The other 70 or 75, 80% are in that gray zone where what they're
Promotional.
doing. Yeah, it's like misleading accounting. It's
like Herbalife.
Probably illegal.
Would that be in the gray zone type of thing?
Herbalife was it? So the numbers were real there. Okay, so that's also one of the other lessons of business is that businesses that do things they shouldn't be doing can be great businesses from a financial perspective. So, Bill Ackman was right. I mean, the FTC hit them with a record fine, but he was wrong in that it didn't matter. It was like $120 million.
It's like suing tobacco companies. He wasn't even alleging fraud. He was saying this is bad for the Hispanic community because they're being scammed.
But so that's the thing.
He did initially call it a fraud, but a consumer fraud, not a financial fraud.
Like talking people into becoming wholesalers, taking on all this inventory. Right. And he was right. Of course, that's toxic. That's not good for anyone.
But so you need to be right that these companies need to be a fraud. And ultimately, if that does not hit their bottom line, investors just might not care.
Right. So what happens a lot of times then is we or another short activist publish on it. The idea is that we create enough scrutiny and pressure that things inside the company start to break. So people get uncomfortable with continuing that behavior. So you might start to see resignations. Maybe the auditor says, hey, look, we have an issue here. And the auditor says, well, if you're going to continue to do this, we need a lot more disclosure. Oh, yeah, but that's going to basically, show that Muddy Waters was right. Well, that's what our lawyers are telling us we need to do. So some managements will just basically back off the aggression right away. So if you
they'll stop doing what they were doing.
So some of them will.
But they'll also deny it simultaneously.
Right. They'll deny it, but they'll back off or they'll double down on it. So, I don't know if you were going to bring these up and I'm like jumping the gun a little bit.
Let's go.
So if you look at a company that we shorted in November of this past year at Irisone London, it was Elf Beauty. So what we were looking at customs data and we saw that their imports fell significantly and couldn't be reconciled with what they were reporting as cost of sales. So we were saying that we think there's a serious problem here, real misstatements in the inventory accounting, the cost of sales, and also the revenue. So they denied it. Now, to be fair, they did say, hey, we had just gotten confidential treatment for our imports, at least some of their imports, as of January of 2024, which nobody asked them, well, why did you suddenly get confidential treatment? They said it was for competitive reasons, but that was a total BS excuse because their suppliers are well known. Their suppliers don't change. It's easy to figure that out. So it wasn't for that reason.
Did they do that in response to somebody asking questions?
No, I think because they knew, look, I think that they messed with the numbers and I think they knew they were going to be messing with the numbers in my opinion, they had a plan to mess with the numbers and they realized that they could get caught through the customs data. So they got confidential treatment on most of it. Now, we went out there, we said, hey, these numbers are problematic. They, of course, denied it. But then when they reported their next quarter, they lowered guidance significantly. So in my mind, that was, okay, you guys are unwinding this. You're going to miss. You're going to try to dive below everybody's radar, and just hope that it doesn't go bad for you.
When you say they, sorry to interrupt, but when you say they, is this like the CFO? And is this like, does everybody know who's they?
Yeah, it's a good question. I mean, we're talking top management usually. And look, I'm not privy to the discussions, obviously. I can't get internal company documents, but something like that would be CEO definitely, CFO most likely. Maybe there are some people in accounting, but basically whoever has access, and that's one of the things we also found out was in the course of our research, they did not have good internal controls. And so when you see that with companies, it doesn't just mean that there's a risk that numbers will be accidentally misreported. A lot of times with the companies we look at, we think, that's a feature, not a bug, right? They deliberately have weak internal controls. So that's one type of response. So again, this is
philosophically though. Do you care if that's the outcome? Meaning, they unwind it in plain sight. They don't say we're unwinding us messing with the numbers. They say sales are going to be lower next quarter unexpectedly. To your point, they dive below the radar. The stock goes down either way. You need. Do you need philosophically, you Carson Block? Do you need justice, or are you just as happy with the stock price falling and you being vindicated?
Well, look, of course, I would much rather there have been an investigation, and then at least civil charges, if not criminal charges. That's
important to you.
Well, you much rather have that because in my profession, you always have a lot of haters. You always have a lot of people who are going to make excuses and say like, oh no, that's not, no, it's just because XYZ was happening. You weren't right, blah, blah, blah.
Okay.
It's just nicer to be vindicated, especially because, there's so much hatred that gets directed back toward us, like on social media, et cetera, that it is always nice when those critics go completely silent. And then occasionally one or two will, DM or tweet like, oh, wow, I guess I really had this one wrong.
I mean, the stock went from 220 to 50.
Yeah.
Are you still short?
No, we're no longer short. So
you were saying the second type.
The second one is when they're just like, we already bought this boat and man, we're going to defend this. And so that would be like AppLovin. So we reported on them a couple months ago, and basically the numbers are real. We're not accusing them of fake numbers.
That was you? You're the primary on AppLovin.
There were a bunch who came out at the same time.
Okay.
So, I mean, the funny thing is we all get to the same conclusion, but through different methodologies. So our methodology was the most technical in actually looking at the code and how AppLovin has created these, in violation of all the platform's terms of services, these persistent identifier graphs that track users from site to site and then hit you with retargeting ads. And that's prohibited by Google, by Facebook.
They found a way. So it's like you download a solitaire game because you're on the airplane, and before you know it, like 6 months later, they keep hitting you with more and more ads. Because they have you.
Right. But unless you opt in, they're not allowed to do that. And there are also laws that prohibit that now, as well as the platform's TOS. So they say, oh, we created this great AI that, delivers results that are almost as good as those of the companies that actually are the platforms and that can track you because people opt in. And no, they're just violating the TOS. And so we published that. The CEO and CTO put out a response, denied it. But the thing is, they didn't stop the behavior, right? So when we still look at these sites and, we see that they still they're still using these persistent identity graphs and they're just denying. So that's the other response. It becomes binary. That's
either a current position for you? You're short AppLovin right now?
We are. So we're taking on the chin a little bit today.
Up 12% today. They just reported.
They had an earnings report.
So we put out an update yesterday. It was a video that showed, hey, they're still doing this. And the CEO and CTO lied. Those were our actual words. So we're saying that they lied in their response when they denied that AppLovin uses these persistent identity graphs. But, the numbers were great because going back to the point about Herbalife, it turns out that when you have a business that's doing things it shouldn't be doing, it can be a pretty good business.
Shouldn't be doing morally.
Well, shouldn't be doing morally and legally. Yeah. And, here's the thing with that one, and not to delve too deeply into AppLovin, but the platforms could shut them down. Okay, that's one risk. But if the platforms don't shut them down, this doesn't take a genius to do what they're doing. So you're going to have all of these other like tiny little ad tech companies say, oh, wow, we can play this game too because this is tolerated. And so basically their margins are going to be, cut to, razor thin if the platforms don't do anything about it.
So your thesis is like, even if they keep getting away with doing this thing that you are asserting they're not supposed to be able to do on the platform, that actually might not even work out well for them because then everyone else will do it too.
It's a $115 billion market cap?
Yeah,
Holy shit.
No, I mean, in 24, last year they ramped this thing. It was irrelevant to like.
That's what I wanted to ask you. I think it was I forget what period of time it was the best performing stock.
Yeah.
I don't want to say it was in the S&P. Maybe it is now, but it was in like the Russell 3000.
Yeah.
But I remember watching this thing. I had no idea what the company did. And then all of a sudden, a bunch of short sellers are publishing on it. So you mentioned that we all arrive at it from a different perspective. But the number one performing stock, and no one's ever heard of the company,
right,
has to get a lot of attention.
Well, so yeah, to your question earlier, right, about how do we develop ideas? So when you see something like that, everybody in my business started looking at that because it just climbed a wall. Like the stock price went vertical.
Everyone's trading it. Right, everyone's talking about
exactly. They start using AI. And look, as soon as ChatGPT happened, okay, all of us in our office, all of our peers, whenever we talk to each other, we're like, okay, we're about to get this tidal wave of AI scams. Like everything is going to call itself AI.
You're licking your chops.
Right? Yeah, exactly.
Like the EV stocks in 2021, the SPACs.
Yes,
these things come in waves.
Yeah, exactly. Okay. So that is one of the ways that we really identify, or that helps us identify things, is when something gets hot. Yeah, maybe like the first 1, 2, they're fine.
You start sniffing
third one
around.
maybe. But by the time you get like the fourth or fifth entrant into a space, or to go public, or to really start pushing this narrative in the case of AI, because these companies existed beforehand, that's when you have to take a look and say, yeah, maybe you're not really what you're saying you are. So, and if there's something to do, look, that was such a hard stock. I mean, I feel like we got our timing reasonably correct, because if we tried to do this, like maybe 5 months earlier, we would have just been run over because of the momentum of that.
So I want to ask about your process.
Mm-hmm.
All right. You're doing deep research. You say that an activist short seller can cover maybe 5-6 names a year, right? All right. So you're sniffing around, you find something, you get a little hornier, and you're like, I really got something here. What happens if over the course of time, when you're doing the research, the fraud is uncovered, the stock craters? How quickly do you put positions on? Where do you set your stops? How do you take profits? Like, how does all of that work? Are you short the stock?
Sure.
Is it options? Talk about all the process of stuff.
Okay. All right. So, well, in terms of the trading positions and that risk, that does happen when we preempt each other all the time. I mean, we were working on AppLovin for, I don't know, maybe a couple months, and we saw short report after short report come out, and we thought, shit, it's over.
Were they having an impact?
Momentarily. That's the thing. The stock rebounded.
Was still there.
So we thought, okay, look, nobody has published what we have. So we have this code. It shows these persistent identifier graphs. Nobody's published that. They've talked with people in the industry who are skeptical, former employees, who have negative things to say. So we still have a project, but there are definitely times when we've been preempted, and it's like, well, okay, too bad. So what we do sometimes is we put on what we call schmuck insurance, which, speaking of Herbalife, that's a term from that. Like, I guess Carl Icahn, he has his own version of schmuck insurance, but for us, it's okay. Like, in case we get preempted,
if we're late,
like let's put on 5% of our.
Tip.
Yeah, exactly, just the tip, 5%.
Okay.
So then how do we trade it? Do we use options? Sometimes, but the problem that we found early on. So I started in this business on the activist short side with Chinese frauds, and that's, I think, what really developed that short activism business was these Chinese frauds.
We're going to go back to that later.
Sure.
For sure.
But, initially it was, with our own capital, and it was like, yeah, let's buy a bunch of put options. I mean, that lasted for a few months before, basically, as soon as market makers saw a lot of activity in the put options, especially when you're paying like 110 vol, they're like, okay, everybody knows what's going on, right? So what ends up happening, and now we manage outside capital, is if you're playing in the puts and the puts are not extremely liquid, the tail wags the dog. So you're going to screw up your entry pricing if you go into the puts. So usually, if there's a put market, it's just sort of like, yeah, let's do this, right before we publish. From a psychic perspective or psychological perspective, I really enjoy selling calls right before we publish. That's always
why.
Well, especially if we do it OTC,
because the people buying those calls from you don't also enjoy it.
Yeah, exactly.
Okay.
Like there's so
eventually they really don't enjoy it.
So there was a quote that somebody attributed to Stan Druckenmiller, who I look, I don't know if this is true, but somebody who heard him say this, once, I guess it was years ago. Stan Druckenmiller said, "Yeah, like obviously most of what I do is long, but I like short selling more." And why? Because somebody's getting
Yeah, I get it.
So
I get it. There's a Wall Street mentality too of like it's not enough for me to win. The other person must also lose. There's a little bit of that.
Yeah, I mean, I think when you do this business and you take a lot of shit from people, I mean, there's a lot of hatred directed toward you. Yeah, you definitely you have to have thick skin, or else you're not going to be in this business very long. But you definitely when those days when you win and the haters lose,
there's a revenge. There's a little bit of a revenge factor.
When you get vindication, do you push? Or do you when it breaks, do you say, all right, we are so right, we're going to push it? Or do you take profits?
No, because usually it's it's collapsed, right? So it's like, why would you,
These not undervalued stocks. These are outright frauds that are being unmasked.
Yeah, like everybody who sold, who could have sold has already just sold. And so then you end up doing that stuff that like Melvin was doing, which was so stupid when you're holding a stock that's collapsed to like $1 as a short because, I don't want to realize taxable gains on it. Like the asymmetry of that position, it was so moronic. So no, we don't do that. And we're very quick to say, you know what? Like that's good. Don't look a gift horse in the mouth.
I want to stay on this because I think this is the most fascinating thing. Everybody hates their short sellers because nobody ever says, thank God that fraud got unmasked before I could buy the stock. Because no one ever thinks of themselves as the person who would invest in a fraud.
Right.
But of course, But of course, the longer a fraud goes on and the bigger it gets by market cap, the higher the likelihood that an innocent random buyer might end up holding the stock. So people don't give you guys credit for the things that you clean up. So that's one. But two, there is a common perception, and I want to hear if you think it's a misperception. People don't like to see a stock get ganged up on by multiple short sellers at once. And even if it turns out those short sellers are vindicated, that's where the hate comes from, especially if they're in the stock. And let's face it, a lot of very online traders are going to be in the highest momentum stocks.
Mm-hmm.
And a lot of those high momentum stocks are going to end up the targets of activist short sellers because the way they got high momentum in the first place was by bullshitting people.
Mm-hmm.
So you have this perfect stew of extremely online aggressive traders. They're in stocks they barely know anything about other than the price is rising.
Right.
Those stocks are bullshit, and that's why they're rising. And then you guys come along and look at it and say, look at this. This is a fraud, or this is a scam, or this is a promotion. You guys call it out. The stock gets hammered. To the person who's long that stock, they're not interested in your pursuit of truth and justice. All they know is, I bought this thing yesterday, I'm down 36%. So that's where the hate comes from, and I assume you get that.
Yeah, well,
It doesn't make you wrong.
right.
It just makes it more understandable.
Well, I had this really interesting experience in December of 2010. So I had just moved back from China. We'd published on 2 Chinese companies, and I was at a holiday party in Sausalito, and I was introducing myself as guy who owns a self-storage business in China, which I did before I started Muddy Waters. And anyway, this guy to whom I was introduced, he said he was an engineer. He asked me at one point, he said, hey, do you ever look at these Chinese stocks that are listed here? And I had a few drinks, so I was maybe a little bit looser lipped than I wanted to be at that point in time. But
You said, do I?
Well, I was like, I've kind of done some
By
things
the way,
recently.
a lot of them were SPACs too back then.
Yeah, they were the RTOs, yeah.
They were RTOs, and
Mhm.
people don't remember, but there were investment banks that was 80% of their business.
Oh,
was
yeah, like Rodman and Renshaw. and-
Maxim Group,
Yeah.
and Rodman, and
Roth Capital. Roth is
Okay.
still here. I think Maxim is too. But I was like, yeah, I've done some stuff, and I kind of published some things on some companies. Like,
We went Seeking Alpha,
Rhino.
writing this stuff, or
No, I'd set up a website,
Okay,
and
all right.
and I my first report I sent to 50 people who were in the markets, with whom I'd last spoken 9 or 10 years earlier, who probably knew me as Bill Block's son, not as Carson Block. And that report went viral. And, next thing I know, like day later, Jim Cramer's like screaming on CNBC about how I must be a fraud. And like I'd never met the guy or what have you.
Which was the stock?
This was called Orient Paper. So
I
this
remember.
was June of 2010.
You went there.
Yeah.
You went to the paper factory.
Yeah. Because
Okay.
my father wanted me, he thought it was a long. He sent me there to do diligence on it. And it
What
was
did
a
you
total
find?
fraud.
I remember reading this. I remember reading these articles.
It was a Potemkin factory. I mean, first of all, right, the night before I went to the factory, I finally sat down and read the Ks and Qs. And there was a snow delay in Beijing. I was sitting in the airport in Shanghai. I was with a friend who's in manufacturing, and so we were bringing him on as a consultant. And he and I were sitting at separate tables, just reading through the filings, and we're just bursting out loud laughing at the absurd claims in this. And it's like, so we knew it was f***ed up. And my buddy he's like, am I wasting my time here, Carson? I'm like, look, maybe we can short this thing. I don't know. Like, I don't know what my father would say.
What price is it trading at when you go over there to look at it as a long? Is it like a $30 stock?
Well, I think it was about $850, which is 150 million market cap.
Oh, it was small. Okay.
Yeah, it was small. I mean, look, at the time that was not as small as it seems today.
Yeah,
but I mean, today that would be equivalent to a roughly $700 million market cap.
Yeah.
But so anyway, we knew there were serious problems. We get to the factory, walk in, and my friend leaned over to me. He's like, "Oh my God, we got them." I mean, it was a Potemkin factory. The loading dock that supposedly was servicing 100 trucks a day just didn't exist. There was one truck that was lazily idling there. They claimed that they had about $5 million of raw materials inventory on the balance sheet. And my buddy, like, it's just these heaps. So the company made corrugating medium for boxes. So the wavy layer in between, the outer layers of a box. So their inputs are basically old boxes and scrap boxes. So my buddy is, they've got these just giant trash heaps of old boxes. That's their
inventory. That's got a balance sheet value
of $5 million.
Right.
So my buddy climbs to the top of one, looks around, came down and said to me, "If this is worth $5 million, the world is a much richer place than I ever knew."
Right.
And
so the scam there, though, it's an American investment bank, an American law firm making tons of money in fees for bringing this thing public, listing it on the American Stock Exchange, I'm guessing?
I think it was Amex. So they'd uplisted from OTC and
now you
raised
got
some money.
brokers, and I knew these guys, brokers selling the stock retail to clients. So everyone's getting paid along the way. And as long as the fraud is perpetuated in China, all the American parties continue to get paid.
Yeah.
So what's the problem?
People say like, oh, these short sellers are conspiracy theorists. It is a fucking conspiracy. You can't do this with one person.
Well, if you want to get a little bit conspiratorial about this,
I do. It's a podcast.
So I'd been a lawyer in China. So I was with Jones Day, and I focused on mergers and acquisitions and foreign direct investments. So every time there was a local company involved, so say for JV, first thing you did was as a lawyer, I'd send somebody to do this. Go to this local office called the State Administration of Industry and Commerce. You go to the local office and you get the company's SAIC file, just filled with lots of information, including the financials, the onshore financials. Now, when we did that for Orient Paper, we found that the onshore financials, rather than the revenue having been about $100 million, the real revenue that they were reporting to the PRC government, which they don't want to with, in contrast to the consequence-free SEC, was about $3 million. So,
right. So they tell the truth to the Chinese government, and they bullshit the exchange here in New York
because they're never going to get in trouble for lying to American investors, and in fact, nobody ever did get in trouble. So these SAIC files had lots of information on the equipment, valuation of the equipment. We're looking at the appraisal reports for the equipment. The stuff was carried on the balance sheet at $60 million. The appraisals had them at like $8 million. So there were so many contradictions there. And after a few more China shorts, it became obvious to me that, oh my God, all these American law firms that are doing this securities work that are helping with these offerings in the U.S., none of them are looking at the SAIC files, which again is like standard. Like this is step one in foreign direct investment, like JV and M&A practice. So
what are they doing? They're taking the auditor's word for it, and it's a bullshit auditor? Like where are they, how are they, if they're not doing that bare minimum that you say, what are they getting paid for?
Well, getting paid to do the deal, to look the other way.
Fine.
But that to me, I felt that at a very high level, decisions had been made. I mean, there weren't that many U.S. law firms doing this type of work, especially in the reverse merger space. But I felt that decisions had been made
systemically.
That they were going to entirely avoid using SAIC files in the work that they did.
What's the stock that you made that you lost the most money on, that you were the most wrong about?
Well, I wasn't wrong, but I lost the most money. No, Sunrun.
None of us are wrong.
No, but this Sunrun. So here's the deal. So we were in summer of 22, we were about to publish on Sunrun and how the company is systematically abusing the tax incentives, the investment tax credits, arguably committing tax fraud. And this is the case with all of these rooftop solar companies, but Sunrun was the biggest. So I had been paying attention to the climate bill, right? So as of this moment in July of 22, climate bill is dead. That goddamn Joe Manchin, he won't agree to it, this and that. Nobody's talking about it. So we hit peak risk, market closes, 20 minutes after the market closes, so we're publishing the next day. 20 minutes after it closes, headline, Joe Manchin agrees to climate bill. The next day, that opens up 25%. Now, we had beta hedges on, but
there was a lot of short interest in the stock.
Well, I mean, everything in the green and climate space and solar ripped that day. So, so all those names opened up 25%. And then I made a major tactical error because our question was, well, should we publish this thing or just take our losses, get out of it, wait for things to settle down, and then do it? And my tactical error was, well, everybody's focus today seems to be on the tax credits associated with, these projects or with solar, since everybody's excited about the quote climate bill. So let's put it out there. It was absolutely subsumed by the cacophony of noise. Nobody noticed it. Nobody cared. Stock had opened up 25%. It closed up 30%.
Oof.
So, I mean, that was...
Did you close your short that day?
Yeah, we closed our short that day.
Let's do some of your greatest hits and the things that you're most well known for. The first time I ever heard about you was either Focus Media or Sino-Forest. I think Sino-Forest is the more interesting story to me, just because I remember more vividly. I forget which hedge fund manager it was, but somebody presented this thing either at Irisone or at some big event as a long. And I know John Paulson had a big stake in this, but there were well-known, quote-unquote, brand name hedge fund managers with big money, and they were invested in this Sino-Forest, which I guess effectively was like a timber play out of China.
Right.
And that's, I think, the first time I had ever read something that you put out or saw the response to it. But tell us about Sino-Forest.
Sure.
It was a really big stock at one moment.
Yeah. I mean, at the time, it seemed like it was quite big. I think it had a market cap of about 5 billion, EV of 8, which again, in 2011.
Yeah, today it'd be 20?
Yeah. Those were, reasonably real numbers. And the largest shareholder was John Paulson. So what had happened was we had a very bitter battle over another U.S.-listed China company called China Media Express, CCME. And there were a few other short sellers involved in that too, including Andrew Left of Citron Research. So that was such a bitter battle because it was audited by Deloitte. And Deloitte ended up resigning with flying colors. I mean, the resignation letter is one that was, just made clear that all these accusations were accurate. So as soon as that cratered, got a call from somebody who was a PM at a very large New York-based hedge fund. And they said, okay, congratulations on China Media Express. I'm going to talk at you about a company. Have you heard of Sino-Forest? And I hadn't heard of it, because it was listed in Canada. I knew all the names of all the U.S. listed.
Toronto listed?
Yeah, it was.
Okay. Yeah.
It was TSX listed. And so they started saying, okay, so this is a company that supposedly does, billion whatever a year in revenue, 1.1 billion or something in gross profit, but it never issues VAT invoices to its customers. It instead relies on its customers, pay its suppliers, blah, 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 and have them issue the VAT. And they start listing a bunch of factors. And having practiced law in China, I mean, I already know that if the facts they're citing are correct, this thing is a substantial fraud because you don't do business in China that way. They were violating the law, if you believe them and believe their disclosures in, 10 to 15 different ways that were material. So, I looked it up and like, my God, it's got debt on it. It's got CDS. Wow. Like this can be a big trade.
Yeah.
So, previously my team had been somewhat small and we were generally all working remotely from one another.
2010, 2011?
This is 11. So
Okay.
This conversation I had was probably at the end of March of 11. And I said, okay, I need to add people to the team. So I ended up adding to the team a PRC attorney, few other people. I kind of, approached me over the past year and change. And I rented an office space in Hong Kong, brought us all together. And it was fantastic because Sinoforce had been public for 16 years. So there were so many problems. As we're reading through those SAIC files, Sinoforce had over 100 entities. So that was well over 100 SAIC files we had to read through. And it seemed like at least once a day, somebody would just laugh out loud and say, oh my God, yeah, like obviously forged bank letters, right? From like HSBC with like the worst Chinglish you can imagine and like crooked logo and stuff like that. And also we found out that from one of the SAIC filings from its original entity, we found out that they'd been lying since day one. So they went public via reverse merger onto what was then the Toronto Venture Exchange. And so they told this story about how they had this joint venture with the local forestry bureau, and these were the results. That joint venture never got started. That SAIC file had letters from the forestry bureau, the local forestry bureau, saying, "Hey, you've never committed the money that you promised to commit, and instead you've stolen assets from the joint venture," and blah blah blah. And it never produced anything. Yet for years,
there's no trees,
right? Yeah,
Sinoforest, but they don't have the trees.
There were.
So they sold stock.
Mm-hmm.
That was the business. They sold stock to Canadians.
The real business was being public, and that was the case for a lot of these Chinese companies listed here. Is that the real business was being public?
Did that go to zero?
Yeah.
Did you ride it to zero? Or
no?
Okay.
No.
Is that the most money you've ever made on one of these? Or it's one of your larger trades?
Well, we had an external balance sheet at the time.
Okay.
I would say my take home on that's probably still about the biggest. I mean, especially at that time, that was life-changing money for me.
What does external balance sheet mean? Like other people's money?
Other investors.
Like you were doing a hedge fund?
So no, I didn't have my own hedge fund because I'd wanted to set up my own hedge fund, but the problem was it was so expensive to do it. Nobody would prime for us either. And when you're shorting stocks, you need to have a real prime broker that can get stock borrow.
They don't want to be involved with that.
Yeah, everybody was like, nah, go f yourself, not interested. So there was a hedge fund that, it was more of a family office at the time, but they said, look, what we'll do is we'll put the positions on and we'll pay you a percentage of the profit. And so that's how that works.
You ever have an interaction with Paulson or any of the high profile hedge funds that were caught in that stock?
So it was funny, right before I went out to Hong Kong, I got an email from somebody at Paulson. It wasn't Paulson himself, but it was one of his PMs. And, said like, hey, would love to talk to you. At that time I was getting those emails from hedge funds not that infrequently. So I was going to New York anyway. And I thought, all right, it'd be good for me to sit down and just hopefully establish credibility. Like I already knew that we were going to be working on Sinoforce. I was pretty certain we were going to go the distance in terms of publishing it. So it was a little bit tricky. I went into the meeting and, like, how did you start this business? This is how I started it. This is what I look for. Look, guys, this is what's really happening in China and what people don't know. And then it turned to, so do you ever look at real asset companies? You mean like real estate? Yeah, real estate or forestry or stuff like that.
Yeah.
Huh.
Implying that you are out of your depth in looking at
No.
Sino Forest?
No. Wanting to know if I had a view, trying to feel me out.
They were nervous.
Trying to feel me out on that. And,
that's interesting.
And, that was an awkward question. And, I didn't want to lie, but I didn't want to say, oh, by the way, guys, I'm working on Sino Forest.
Yeah.
So I had to kind of dance around. I'm like, well, I think there are a lot of problems in the space. There was that big Hong Kong listed forestry fraud called China Forestry. It just seems to me that with these assets, really difficult to actually track ownership. So yeah, I don't know. But anything in particular?
Yeah.
Then it was their turn to be coy, and that was that. But
would you say that one put you on the map, though?
Yeah,
because a lot
did.
of articles were written about it because of the people who lost money.
Well, especially because of John Paulson.
Yeah.
I mean, that was, from a profile making perspective.
Yeah.
That was huge, right? It's not only was it a big company and, but it was because John Paulson. So I remember, I think my favorite article at the time was Business Insider. The headline was something like, "Meet the man who just cost John Paulson $500 million."
I bet you that was my friend Lynette Lopez. If I had to bet.
I don't know if Lynette was doing this yet,
Okay.
actually, but
All right.
it showed and had a picture of me taken from my wedding where I'm in like a Hawaiian shirt in LA, and it's like I got this big grin on my face, and so right under
Luck and Coffee. This is fairly high profile and more recent. The quote unquote Starbucks of China stock collapsed 90%.
Right. Well, it was actually delisted, but this is one that I don't deserve credit for.
Okay.
So it's misattributed to me. We published somebody else's research because what happened was there was a hedge fund that had done all this work. They did great work, and they wanted the guy reached out to me and said, "Hey, would you publish this?" And I said, "Listen, our process. That we have to recreate the work, right? We're going to so you did all this field work. We'd have to do all this field work. So I'd love to get a look at what you've done, but to be honest, it's going to take a few months before we can actually publish it." And so I guess he was pissed off at me and he sent it out to everybody except me. And so I started hearing about this draft from other short sellers and, who just don't know China nearly as well as we do. And, nobody published on it. And so, because they can't attest to that work. So it was unpublished. And I thought, you know what? Let me talk to the guy, see if we can get access to the data room. And what we can do, if we can validate the work, we'll do it on a sampling basis, kind of like we're auditors. If it lines up, then we will say we are short Luckin Coffee because we think it's a fraud. This work was carried out by another party. However, we have evaluated it and believe it to be accurate. And a couple days later, that's exactly what we did. So
what was the scam? I have no idea. What was the scam with Luckin Coffee? Because it still operates as a business, right?
Right. So it was fake revenue and fake profit. But the way that they were pulling it off, the thing is with most frauds, there's an element of practicality that enters into it because you have to forge a lot of paper. And so if you're going to Luckin, the average ticket size, a few US dollars, right?
Yeah.
How do you forge that much paper from that many stores and
transactions
and put and try to make the bank account sync up? So what he did, what the controlling shareholder did was he created this fake corporate sales business. And so it was one or two counterparties that supposedly accounted for, 40% of revenue. We're buying gift cards in bulk. And so EY, after we published that work, that was somebody else's, they were kind of forced to actually look a little bit harder than they normally wanted to. And, when they came across those invoices, they asked maybe, 3 questions and, it's like, uh-oh. Yeah, it's a fraud. And so then they went to the audit committee. And look, the boards of these companies were always in on it. okay, of these Chinese companies. Like they were never independent. They were never there to safeguard the outside shareholders' interests.
Right.
But when the auditor, which the auditors were basically, I'm not going to say they were in on it, but they were basically, their role is to not rock the boat. They don't want to discover
It's a big account.
fraud.
It's a big account.
Well, not only that, but it became a problem for them because, they would, if they found fraud, okay, in theory, if an auditor has been auditing a company for multiple periods, discovers fraud, okay, in theory,
why didn't they catch it earlier?
It's in their interests to expose it and cut off the liability and stop accruing additional liability. In practice, though, that's not how it works. It's always settled. So if you're an auditor, you think, well, we've already issued unqualified opinions on 2 years or 3 years of financial statements.
Yeah.
This thing is just going to get ugly and it's going to be, years of litigation. The best thing that we could do is to not discover fraud. I'm not saying that they discover it and say, oh man, let's pretend that didn't happen. I think they deliberately design audit procedures especially in a high-risk environment like China, to not discover fraud. And so that's why I make this point of saying that EY, I'm sure, very reluctantly looked into this. So, so basically they brought it to the board, or at least the audit committee. And again, I'm sure they were all in on it, or that's opinion. But, at that point, what are they going to do? Then they have to basically, throw the chairman under the bus, like, oh, you bastard, how dare you? But,
Right.
So Carson, the business of muddy waters, you guys are publishing research, you're shorting stocks. Is it a hedge fund or is it your own money? How does that work?
So it's a hedge fund, and
Okay.
we don't get paid for publishing. So we basically manage. See, here's where I have to be careful because there's the SEC cares about the F word, which is the fund word, right? So
Okay.
I can't make it sound like I'm engaging in a general solicitation. So
Okay, Carson
You are
is
not a
not.
solic-
so
this is not
Carson,
solic-
is,
so we
Carson
use-
is not promoting
Yes.
his fund. He's giving us information about
don't
it.
invest in it, whatever you do.
Do
I
not
would not
invest in
want
the
that.
fund. Okay.
So we use the S word, strategies.
Okay.
So we have a strategy where we, with outside capital, I mean, a lot of it, look, there's a good portion of my own, I'd say the substantial majority of my net worth is in these strategies, where we short the stocks and then we publish on them. So that's basically how that
in
works.
that order, which is why
Yes.
you end up sometimes in a spotlight that you don't always want to be in.
Yeah.
Okay.
Yeah.
Can we talk about that?
Yeah, absolutely.
So, so you have a hedge fund.
Mm-hmm.
You're going to publish, and part of the reason that you're going to make money in your investment strategy is because the rest of the market is going to read your research and realize you're right. Something wrong with this company. They're going to sell it. They're going to want to get out of it. Okay. Long investors do that all the time. Long investors
Sure.
are long a stock, and then they go out and say, I love this stock. I
Mhm.
bought it because A, B, C, D. Okay. For some reason, it's asymmetric. There's a problem with doing it in the other way, saying, I'm short the stock and I hate it, and I think something's wrong with this company. For some reason, that's more problematic. Why do you think that is?
Well, the simple answer is if you come out and say something nice about a stock, nobody's going to complain.
They
Right,
could say
right.
pump and dump. They could say manipulating. They could. They
mean-
just don't automatically. I feel like with activist shorts, the automatic response is, oh, this guy's trying to crash the stock.
Right. Well, look, you're basically accusing the people who run the company, and by extension, the company, of acting in bad faith.
Yeah.
And they have a lot of resources they can spend on PR, legal. And so what are they going to do? They're not going to admit like,
You got me.
yeah, yeah, good
Right.
catch.
Of course.
So they have to come out and they have to resist. And then you have a lot of, especially in the institutional investor world, I think that this is probably the most overcompensated industry on the face of the earth, right? There's so many people who are just mediocre and lazy and make real money. And so when we come out and say, hey, things are not what they seem with this, it goes to a lot of their insecurities on an individual
makes them
level.
look like they're
Right.
not doing anything.
Right. And
Yeah, I agree with that.
but to be clear and to be fair, even if somebody is bright, even if they are reasonably diligent, you can still get defrauded. I mean, in the midst of my muddy waters business, I was defrauded incredibly badly by a couple of people who got involved early on, right? And the reason, and that made me realize, okay, the reason that I was defrauded is the same reason that a lot of smart and diligent investors themselves are defrauded, which is if you're looking to buy something, in my case, it was to buy talent. In everybody else's case, it's to buy a stock. If you're looking for reasons to like something, you have to think kind of conventionally about why you might not like it, right? You cannot be thinking simultaneously, does this, do I think that this market makes sense? Do I think it's going to grow? And are these people lying to me? Mentally,
you'll never buy anything. You'll never invest in anything.
Right. Mentally, nobody can wear both of those hats.
That's such a great point.
Yeah.
So, right. If your starting point is everything I'm reading about this company might be fake, you never invest in anything.
Right.
You have to start with a baseline assumption of trust, whereas on the other side, on the short selling side, you kind of have to start with, if this is fake, how is it fake?
Right. And so it's like we can look at, again, the fifth company that started, claiming, oh, we're big AI and this and that. And we can parse every statement, say, yeah, that looks, that's good. That wording is kind of weaselly. And the f does that disclosure mean? Come on, man. Like, what is that? So we can do that because we're putting on that hat of effectively looking for deception. But you cannot simultaneously look for the good and look for the really bad. It's just mentally not possible. So
yeah.
It's not to say that investors who, I think even really smart and diligent investors, to be fair to them, they can get defensive about this because there's an implication like, oh, you're stupid.
Right.
Some of them are.
Is there a personality type that's a prerequisite to become a professional short seller? Do you have to be like Chanos named the firm for his
Skeptic.
Original firm was like Greek for skeptic. Do you have to start off cynically or skeptical as like a predisposition to be successful in what you do?
I think so, but one of the things about Jim is that he has like a very, he has real pedigree, right? He graduated from Yale. If I look around activist short sellers, there's only one person who has a good pedigree, and that is this guy Soren Andal of Blue Orca, who's a good friend, and he's also based in Austin. And I always kid him. I'm like, how did you get into this? University of Chicago undergrad, Harvard Law School. You were at Sullivan and Cromwell.
Meaning he could do anything.
Right.
And
like
he chooses to do this.
Well, I think when you're smart enough, you can do anything. But usually when you're on that establishment path, you usually don't deviate from it or deviate from it that early in your career and deviate from it so radically.
Yeah.
I mean, the people he used to work with at Sullivan and Cromwell, some of them presumably are at law firms now where they're engaged to, evaluate his reports and, and find ways to attack him. So that is a really big pivot. And so for Jim, again, Jim's business is not being an activist short seller. So I don't really know what it is about Jim that makes him.
On that distinction, there was an era where David Einhorn was one of the most famous short sellers and an activist short at that. He wrote a book. Was it A Short Guarantee or?
No.
It was fooling some of the people all the time.
No. What was the company? What was the underlying company?
It was Allied Capital.
Allied Capital, maybe A Short Guarantee was Ackman, who was also doing this stuff.
Well, Ackman did the monolines. I don't think that A Short Guarantee was one of them.
Einhorn went after Lehman as an activist. So there wasn't always this black and white. You're either an activist short or you're an investment short. So like a lot of these, but they're all out of that business now because all it does is draw negative attention, create enemies, put them in the regulators' crosshairs, and they were just like, "F***ing, I'm buying Chipotle."
Right. And you have to work.
That's what I would do if I were them.
And you honestly have to work so much harder per dollar that you make on the short side. So for
and you just love it.
But when you become a billionaire, the last thing the last thing that most of them would want to do He's like, let me go stir some shit up and get into some fights.
Right. It's like financially, it's not going to move the needle for them to
Right.
be activist short sellers at this point in time. I mean, don't forget Dan Loeb. I'd say Dan
Right.
was
Dan Loeb was
Dan
one
was
of-
the most aggressive of them.
His letters were
Legendary.
legendary.
Even before that, he was Mr. Pink on the Yahoo
Right.
finance chat
That's right.
boards, like very foul mouthed, and he doesn't like people to remember that now because he's like Mr. Institutional. But yeah, I've
those
done
guys
it
are
this
gone.
long.
My point is those guys are gone.
So what are you
not-
still doing?
It's not worth it. Well, okay, so that's a live audience here, Bernie.
They love you. Can I ask you in the same vein before you answer that question?
Mhm.
The Hindenburg thing is so fascinating to me. What's Nate?
Nate Anderson, yeah.
This guy came out of nowhere. He dismantled probably, 10 horrendous frauds.
Mm-hmm.
And then at the very top of his game, he toppled a billionaire in India.
Mm-hmm.
He unveiled the the fake Tesla company where they were rolling the truck down the hill. At the very peak of his powers, he goes, I'm good. Like I said, everything I said I was going to do, I did it. And I made money along the way, and I made other people money, and I saved people from scams. And that's it. I'm out. Like that was so fascinating to me, the entry and the exit.
Well-
And I wanted to get your take on it.
Well, so the thing is that a lot of people don't know he had been doing this for a number of years before anybody heard of him.
Okay.
So
This is for the audience, Hindenburg research.
yeah, so
Okay.
he was, it was, I don't know, maybe 4 years, I want to say, of him just grinding it out, like not making much money, getting sued, a lot of frustration. And then he hit all of a sudden with Nikola and the rolling the truck down the hill. And that massively elevated his profile.
Yeah.
And so it's one of those things, like once you break through and you have a profile, then it becomes a lot easier. And he was and so he did Square, he did Adani, he did Icon, but he was also doing a lot of like smaller, easier frauds. He wasn't managing outside smaller, easier scams, I would say. He wasn't managing outside capital, which is something, my firm is kind of boxed in because, if we were to take a $10 million short position in something, it's not worth we're not going to move the needle for our investors. And
It's a lot of aggravation.
and the legal
risk.
risk is the same, right? If they sue, it's going to cost just as much to deal with that. So, Nate had been doing it for a number of years. So he put a lot of miles on himself then. And, in a way, I think he's one of the very few people who've left the world of short selling, whether it's traditional or activist, on top. I mean, pretty much everybody else, they're in it until they blow up.
That guy's amazing to me. The amount of courage that it takes to fight people as powerful as the people that he was going up against, and he was winning.
Yeah.
It's nuts to me. I get why he would want to walk away from it, even at the top of his game.
Yeah, like we were going to, in 2012, we were going to report on something that it was a real business, but they were committing, in our view, some level of fraud. And then Icon went over 10% in it. And
Carl Icahn.
Yeah, and we were just like, you know what?
Let's
This
not do this.
This guy is so vindictive that he could just chase us around from short to short, lift offers. And there was Nate.
Nate's like, I
Nate's
got
like,
him.
I'm not only am I going to short something that Icon's over 10% in, I'm going to short Icon Enterprises.
Unbelievable.
And just kick him right in the balls as hard as I can.
I think he ended his career effectively.
Yeah, I think so.
Okay.
Carson, any short bombs you're working on?
I mean, we're always working on some, right? But
You will not be the first to hear about it. Well, so Michael asked you a question and I preempted it, but I do want to hear. So like what gets you, I know this is about money, of course, but it's always about more than money. So like, what are you still doing this for in your mind besides the money, and like what motivates you? What gets you excited?
Well, so we have broadened the business significantly in recent years. And I mean, I think from a personal and professional growth standpoint, if I weren't broadening the business, then I don't know. I don't know if I'd be doing it anymore. Like I enjoy it at times, but it's, it does put a lot of mileage on you. There's a lot of litigation. I went through this investigation. I've been investigated by 3 different governments and, never found anything wrong, but it's—
Is that the worst part? Is that worse than the lawsuits?
Yeah, the investigations, especially the DOJ, SEC one, that one was definitely worse, especially because I'd helped them make so many cases over the years. It's like, I mean, it really made me question everything, like my reality, because it's like, how did
I'm one of the good guys.
How did I become the bad guy?
Well, in the comics, in the comics, the superheroes get chased by the law too sometimes.
Yeah, and so that's what happened there. But But no, we do stuff that's mostly long oriented in the junior mining space. And then we started investing long in Vietnam and public equities, and we're about to expand that into India as well. And I'm really excited about that.
Okay.
So, like that's the stuff that gets me out of bed as well, is that there's opportunity to grow. But honestly, if it were just short activism, I mean, I've seen almost all the scams. They used to be really excited, like, oh, wow, that customer's fake, but now it's, the customer's
now it's
fake.
just the same scams over and over.
Yeah, it's the same thing.
Well, on behalf of the people who have read your stuff and learned from you over the years, and maybe were kept out of trouble by stuff you've done, I would just say it's really remarkable way to earn a living, remarkable way to build a reputation, and you did it. And congratulations on that. You are very public, and I want to tell people, obviously, all the short sellers seem to love Twitter for some reason, or X.com. That seems to be where you guys hang out the most. Is that the best way for people to follow along as you publish or as you talk about things?
Yeah.
Okay.
We have problems with the email distribution list.
Okay.
So
a lot of fake emails?
No, just every time we want to send something out, there's like an error, from the email. It's like it's that last mile that always gets us with publishing. So Twitter makes it easier. So yeah, at Muddy Waters Re is
great.
And I also tweet a lot of my own personal shit there too. So
okay, all right. Well, we really appreciate you coming in. I've been looking forward to this ever since we booked it, and this did not disappoint. I've had so many questions I've always wanted to ask, and you were amazing. Thank you so much. We always end the show by asking people what they're most looking forward to. So I know Michael's already. I think you probably could guess Michael's is Game 3 on Saturday, which they're playing inexplicably at 3:00 in the afternoon.
Believe it.
I have no idea why that's
So
the case.
annoying.
What are you most looking forward to in life or professionally? What?
No, I mean, I talked about India. I'm really excited about that. But in life, I'm going away for the summer. But in the sports life, tomorrow, big Little League game. I coach my son's Little League team.
I used to.
It's playoffs.
Say more. Are you the head coach?
I'm the assistant. The head coach is like a really serious.
Never do the head coach. Never be the head coach unless you were born to do it.
Yeah, no,
it's an email
he's born
job.
to do it.
And it's a mother management job.
No, he's good at like that part. Okay. I mean, that's not the hard, because he knows who to draft for, quote, good families.
Yeah.
But which is a big thing. But no, I mean, he's just an excellent, like he gets on everybody about like, hey, when you field a ground ball, you got to have your left toe pointed up and wait on your right foot. And, nobody ever did that with me when I was even playing high school ball. So,
dude, God bless the Little League coaches. Yeah. I still remember my Little League. I was never an athlete, but I still remember my Little League coaches. I could tell you their names and what age I was. That's so elemental for young kids to grow up playing sports. It's not even about the sports stuff. It's about being on the team.
Yeah.
And the coach is the person facilitating it. So, do you know Michael does a little bit of coaching here and there?
Oh,
do a little nothing.
I'm like the assistant to the assistant. I like wrangle the kids.
He's the front office guy. He makes the trades.
Yeah, exactly.
All right, Carson, we're going to let you go. Thank you so much for being here. We really appreciate it.
Thanks,
I want to
guys.
congratulate John on 4 years with the compound. And I said this privately. I don't want to make you blush. I'm going to say it publicly for all the listeners. Duncan was game-changing for what we do here with all our shows, but you are the person that made it sustainable and made it so that we could put out as much as we put out. I know the audience loves you. I wanted to tell them 4 years. You've been hugely instrumental. Duncan, you're pretty okay too. Shout out to Rob, Nicole, Chart Kid Matt. Shout out to Sean, Graham, Keith, everybody who helps us with the show each week. We appreciate you, Daniel. That's it from us, guys. Please leave a rating and review. Please follow Carson Block on X.com, and we will see you soon. Thanks again.